Welcome back, traders. In today's video, I'm going to break down a perfect smart money concept setup step by step. We'll look at break of structure, liquidity sweep, inducement, market structure shift, point of interest, and finally, our buy entry targeting buy-side liquidity. As the market opens, price is clearly trending downward. We get a clean break of structure, or break of structure, when price closes below the previous low. This break of structure is important because it shows continuation of bearish pressure. But remember, smart money often pushes price lower only to engineer liquidity. So even though break of structure forms, I'm already preparing for the possibility of a reversal later, once liquidity objectives are met. After the break of structure, price dips further and sweeps a cluster of equal lows sitting beneath the structure. This move is intentional. Smart money taps into the sell-side liquidity resting below these lows. Once that liquidity gets taken, price quickly rejects from the area. This is our first clue that the market may shift from bearish to bullish. After the liquidity sweep, price rallies away and leaves behind a clear point of interest, or POI. This point of interest aligns with the demand zone created by the displacement after the sweep. My focus now is simple. I wait for price to return to this point of interest because this is where smart money is most likely to reload long positions. Remember, we don't chase price. We wait for price to come to us. As price moves upward, we get a market structure shift, also called MSS. This shift confirms that bullish strength is entering the market. The combination of liquidity sweep, strong displacement, market structure shift gives us a high probability setup for a long trade. Before returning to our point of interest, price forms a small inducement structure above it. This is smart money's classic trap. They create a minor high or equal highs to pull buyers in early. Then push price back down into the actual point of interest to fill institutional orders. Seeing inducement before point of interest is a very strong confirmation for me. While the discount zone sets up, we mark our buy-side liquidity, or BSL, above. This typically forms at equal highs, a swing high, or previous structural highs. This becomes our final target for the buy trade. Price finally returns to the point of interest. Here's what I look for. A rejection wick, bullish pressure entering, cleaner confirmation on a lower time frame if necessary. Once I see that, I enter my buy trade. My target is the buy-side liquidity we marked earlier. This trade moves beautifully from the point of interest all the way up, clearing every internal high and tapping the liquidity pool. If you found this breakdown helpful, make sure to like, comment, and subscribe. Drop a comment if you want the sell-side version, or if you want me to break down your chart in the next video. Trade smart, stay disciplined, and I'll see you in the next one.